Now, if you could share with us a little bit of the outlook for the music subscription service. We have Tencent Music running QQ, Qguo, and Kuwo. How do they fare against their competitors? NetEase Cloud Music, of course, already listed on the Hong Kong market. What does the environment, the landscape look like?
Yeah, no, I mean, look, those are the two major players. I think if you look at Tencent Music, they clearly they've been growing in the sub 10% range in the last 2-3 years. The stock, I mean, the market cap is about $7.5 billion, and the company's got about $2.5 billion in net cash. So enterprise value is about $5 billion. The company makes about $400 million, $500 million in profits. So it's a cheap name given its cash generation and given in terms of the competitive landscape, it's Tencent Music, NetEase, as you said. I think it's going to be really important in terms of its growth drivers. I think some of the sell-side analysts are projecting that growth is going to pick up and go to the double digits. I think that's going to be really key. That's going to be really key for this, yeah.
Now, China Tech has been really under the microscope when it comes to regulation. Do you think that there are any risks when it comes to exclusivity or any type of music subscription services?
Yeah, I think that's been, I think the bulk of the regulatory, environment that we've seen, which has now been, almost 18, 20 months, I think we've seen the bulk of it, right? It's not in the regulator's interest. It's not, I mean, some of these companies are, very important companies. Stocks are down 65% in the case of Tencent Music, which is not unlike many of the other China ADRs. So I think the bulk of that is really priced into many of these names, particularly for companies like Tencent Music, which is profitable and which does have a dominant place in the marketplace, along with NetEase Music. So I do think that a lot of that has been priced in. Obviously, the geopolitical tensions, also with Ukraine, Russia, the U.S., China, and plus the Fed raising rates, the three factors together have come in to kind of cause like a perfect storm, if you call it. But from a portfolio management perspective, looking at these companies, they're strong balance sheet companies. They should be able to grow mid-teens. There is a significant demand. I mean, if you think about it, very long term, 5 years. Once these regulatory risks are behind us, I think there's going to be significant potential for re-rating for some of these strong balance sheet companies. Tencent Music is one of them.